What's up everyone, and welcome to another cryptocurrency market update. In these videos you can learn tactical analysis so you can forecast price movements in your favorite cryptocurrencies and also see where we are buying and selling these cryptocurrencies ourselves. Today we're going to be looking at Bitcoin, Ethereum, well, just Bitcoin and Ethereum. So let's start off with Bitcoin on the monthly time frame here. So on the monthly time frame, this is going to close out in 3 days and 13 hours. You can see that right now we have an increase in bear volume, but it is possible that we could end up pushing this up to the open for the month, which is up at 58,905, and subsequently from there we will see if we get green volume. That'd be good for bullish continuation, or at least that's the best sign the bulls can really hope for, because I don't know if it's necessarily likely that we'll push above an all-time high by the within the next 3 days and 13 hours. It's anything's possible in the world of crypto, but based on the technicals, it's difficult for that to happen, I would say. But if we do end up setting something like a bearish candlestick here, what we'll look for the next month is potentially a push down to form our first monthly high since back here in August. And then we'll subsequently look to form a higher low somewhere above the one from September here at about 9,800. So on the weekly time frame, interestingly enough, as soon as this weekly candle opened, we were seeing decreasing bear volume last week. And there's something that I want to point out here that's very interesting that I think is hopeful for a lot of people listening to this, and that's to look at the relationship between these two. This isn't established as a low yet, but it probably will end up being a low. These two lows right here. So what we're looking at is a higher low. It's very simple, obviously. This low is higher than this one. But when we're looking at the RSI, we can see that we have a lower low in the RSI. So that is telling us that this is actually very bullish. This is what we would call a hidden bullish divergence. And the way we know that is the RSI is making a lower low, but price is making a higher low, saying we're negating the fact that this RSI is going down and we are in fact bullish. So if we break this dark blue line here, which is the high from the previous week, within the next 5 days and 13 hours, this will end up being a hidden weekly bullish divergence, and that is extremely bullish on a high time frame like the weekly, and that will look to probably propel us in the coming weeks up to new all-time highs. So that's something interesting to keep an eye on. I think that if we're looking at the weekly time frame in terms of support and resistance, the main resistance level here is the R3 pivot up here at about 63,250. After that, we have our next one up here, which is at about 80K. Now, I would imagine that if we do end up starting to go up, it would not be peculiar to see this move up to 80K. And if we move down, the level that I would expect to bounce is this area right here, which is from January 18th, which is right around 38K. We don't really have an established trend up here. I want to be clear about that. And that's important to note, because when you're looking at these time frames, what I try and do is I try and look for the trends that are established on the high time frames. So I have my high time frame bias, and then I can look down on the lower term time frames to see what we're dealing with there. And if we're on a high time frame bias, and that's being bullish, then what we can do is on a lower term time frame, we can look to make an entry on one of those lower term time frames. So right now, we don't really have an established trend up here, because we had a bull trend going right here, but then right here, this candle negated that with a lower low, and then this candle continued it with a lower low. But if this week closes above this key low right here, we did not end up confirming a weekly bear trend or anything like that. So if we go to the daily time frame, a couple things to point out here. Let me just clear up the chart a little bit so it's easier to see. So we can see that we have kind of this V-shaped recovery right here from our drawdown in price. And this is to be expected when a lot of people were going short in this range. A lot of people are becoming bearish here, And that's to be expected because we're having a very bullish push down in price, or I'm sorry, bearish push down in price. But some would argue, as I was arguing when we were going down, that this is what we would call a liquidity run. So liquidity runs are where the whales in the market push the market to a certain spot so they can fill their positions without moving the price significantly. So they need to trigger people's stop losses so then that they can fill their positions and therefore then move the price in the direction that they want to without doing so. I don't know. Let me explain it a little bit better because I don't know if that explanation really did it justice. So liquidity run is essentially where the whales in the market are pushing the price to a certain spot to trigger stop losses. So what they do is they trigger those stop losses. Those stop losses go onto the order book. And then what they do is they either buy or sell, depending on if it's a high or a low. And then they're able to, once they fill their positions, move the price in the direction that they wanted to move it in. Because if they don't trigger those stop losses, they just try and buy on the market $500 million worth of Bitcoin, they're going to significantly move the price, and they're not going to get a good price because they're going to experience slippage. And so what they do is they have to trigger those stop losses. So that's what they did on the way down here. They grabbed the low here, as well as the low here, as well as the low below this support level, this blue support level right here. So once they did that, they grabbed all of it. You can see the lower wick here, here, and here. Then we got this bounce, okay? So now that we're having this bounce, we need to think about the trend once again. So right now there's no trend, okay? We had this area right here where we didn't have a trend. This is just a bunch of chop. And then we went for a higher high right here, right? But it wasn't a bull trend still because we hadn't set a higher low. And then right here, we just did a lower low. So this is just a bunch of chop in here. But now what we're going to look for is we're going to look to come up, form either form a lower high most likely, then come down again. And when we come down again, that's the important part to remember. When we come down again, we need to form a higher low in comparison to this one here. Now, the higher we push up on this initial rise in price, the more confidence we have that we're going to set that higher low because we'll have more area to work with. The higher we push up, the more the larger the percentages that it would have to drop for us to make a lower low. So that's how you know it's increasing our confidence the higher we rise that this is going to form a higher low when we end up coming down. So the main levels to watch, obviously I have a couple rectangles drawn here and then a couple lines. The blue line is from the weekly time frame, so we can change the visibility on that to take that off the daily and the hourly time frames. And then we have on the 2-day time frame, we have this gray level right here, which I imagine is going to be the area that we set our lower high. At least that's where I'm placing my bets, somewhere in this gray zone. And then we go down, and then we form our higher low, and then we go up from there. And the reason for that is because we had a trend right here that did not get confirmed, or that printed a support level that did not get confirmed as support right here, with this candle pushing right through it and closing below it. So we had our low, high, higher low, higher high, and that tells us this is a bull trend, confirmed bull trend with 2 candle closes above this key high right here from April 1st. But then instead of this candle where people were selling their Bitcoin, them buying it back right here when we go back into it, they did not do that. We sold right through this zone. And so now when we come back up into this level, this should be where people sell. And I imagine that this will be where some people are taking profits from going long down here in this range. And then we'll most likely come down from there. But then as long as we form that higher low, the bulls are still doing fine. And then they can go for a new higher high after that. The other zone to keep an eye on is this gray zone right here, which I initially was going to go short on, but I didn't really like the trade once I started to see this V-shaped recovery. It looked very strong. And so therefore, you can see my stop loss would have been right at the top of this gray zone. It's not too far away from where we are now. And therefore, I probably would have got stopped out on this trade. So I closed it right around a break even, which is fine. If you don't like the price action when you see the trade, you can exit the trade. You know, as long as you can feel comfortable when you're in a trade, that's a good trade for you. If you don't feel comfortable when you're in it, you probably shouldn't be in the trade. The other level is this blue zone back here, the support level from March 4th, which goes from about 51.8 down to about 47.5. So you can see I have my risk to reward ratio right here of 6.35. If this ends up forming a lower low, which at this point now with the rise in price that I'm seeing, I imagine we're going to go right into this zone from this low here. And so it wouldn't surprise me if we come down and form a higher low, but it's still going to be a valid resistance zone in my opinion that I'm still going to play, and so therefore I will be watching for this level to hold. And if it doesn't, it doesn't, and that's totally fine. And in terms of the lower term time frames, if we look at the lower term time frames looking for bullish entries, this is an area of interest for me, this yellow zone. So this is a 12-hour zone, and this is from this bear trend right here where we had a high, low, lower high, lower low. And then when we pushed into this zone right here, we're pushing right through this zone. So the high of this white candle is 55,278, and this candle closed at 55,249. So we did not close above that on this last 12-hour candle, but we are operating above that zone right now. So if we do end up pushing above this and closing two 12-hour candles above this zone, this yellow zone will end up being a very strong support, and I would expect the price to do something like this where we push through this zone, we come into this gray zone, come back down into this, test this as support, and then we go for a new higher high from there. So we'll see what ends up happening here with this zone. You can see the bears are trying to kind of protect this zone and like force price to stay around this high. We'll see what ends up happening. But the trend change that we're looking for in 6 hours is for this candle that we are on right now to close above this high. If we do, that is a confirmed 6-hour bull trend, and that's giving us confidence that our low is in for the daily time frame, and it's also telling us that now we can start to scout for low time frame bull entries, meaning longs. But we can't do that yet just until we get this candle close above this key high. Then we know it's confirmed. This candle right here will end up being a support zone for us, and we can look to make entries on that in the coming days. Let's shift over to Ethereum now. Ethereum on the monthly time frame looking a lot more bullish than Bitcoin, as you can see. Nowhere near a bearish candle here with increasing bull volume. We're operating above the yearly R5 pivot here, which is tremendously bullish. I've never even seen something like this happen on the monthly time frame, so that's pretty crazy. You can see we're up at about 25.90, right around an all-time high there. Let's go to the weekly time frame. So everything's looking good on the monthly, so then we can shift down to the weekly and see what we're dealing with here. You can see right now we're just in an inside bar candle inside of the previous weeks where we had that increase in bull volume, but we might end up going above that this week, given that we do still have 5 days and 12 hours left. If we come down, the support zone for us is this black candle from our confirmed bull trend here, where we got the low, high, higher low, and then higher high. Weekly Ichimoku cloud in good position with Tenkin and the Kijun close together and price operating above that. Like I said, there's really no resistance to look at in terms of the pivot indicator for the weekly time frame. So we have to go down to the daily time frame to see our resistance and support zones. So our main zones that we're looking at are this R3 pivot, which is up here at about 26.62. After that, we have our R4 pivot, and then after we get past this point where there's no more pivots, it'll print new pivots based on this price action. So we'll have new ones once we get to the beginning of May. But for right now, these are what we have to deal with, and so this R4 is up here at about $3,012. Something to point out on the daily time frame is the support level right here that we bounced off of once and then twice a second time here. So if we come back in this zone, this will be pretty weak, and we might look to push through this to the bear side if we push through that, or push into that one more time rather. One other thing to point out is the bullish divergence here in the RSI, with a lower low on the RSI, but price making a higher low. And that is once again a hidden bullish divergence. You can see as soon as we confirmed that here, we've risen pretty significantly. So if someone were to play that, that would already be about a 10% gain, which is nice. In terms of entries, the only entry I'm personally looking for right now is this gray zone right here. And this is on the 8-hour time frame. And this is because we have an 8-hour bull trend here with our low, high, higher low, and then higher high. And now we've closed multiple candles above this key high. And this gray zone, you can see we came into it once, rejected, came into it twice, rejected, went into it a third time and pushed right through it. So now if we come back down into this zone, this should be a very strong support zone for us. And I will look to long that level with my stop loss below, right around 23.42, and then be targeting this R2 pivot on the hourly time frame, which is up here at about 29.36 roughly. So this has got a pretty good risk to reward ratio of about 4, which is really good, meaning that if the trade goes my way, I'll make 4 times the amount of money selling up here than I would if the trade doesn't go my way and I lose the trade. I lose 4.82%. So this is just a simple tool that you can use. It's called the long position tool, and you can find that right here in TradingView. I have a video that you guys can check out to learn how to use this tool. It's very easy. It calculates the risk reward ratio as well as the percentage away that your stop loss is from entry and your profit potential. And it's easy to use, and I just like using it because it saves me time as a trader. So if you would like to check that video out, you can check it out above here. And that's all I got for this one, guys. So if you like this video, give it a like down below and subscribe for future educational content around cryptocurrencies and blockchain technology. And until next time, onward and upward.